Hello, fellow traders. As we all know, the market is irrational. But sometimes when we draw back and look at the market in the big picture, we have to see that the market is rational to some extent. And that rationality can be seen in the gap price and also the Taylor trading range. Now, you're looking at my chart of the E-mini, and this is over a period of days beginning here on Thursday, February 15th. And as you can see, prices did come down to the Taylor resistance number and did close the gap of the previous day. Then the next day, on Friday, February 16th, the market traded well within the Taylor trading range and did hit the gap. On Tuesday, February 20th, market dipped below the Taylor trading range, and this is where it gets to be irrational. The market dipped below the Taylor trading range, didn't come anywhere near the previous day's gap. Now, the gap is an important price because we have to keep our eye on it because it's a measure of value. And typically, when the market doesn't close the gap, it will do so shortly afterwards. Now, on Tuesday, February 20th, prices didn't come anywhere near the gap from the previous day. But on Wednesday, February 21st, just after the market closed, the market did close this gap. As you can see, the gap was at 50.20, and prices did, just after the market closed, come up and close that gap. And on Wednesday the 21st, the prices traded within the Taylor trading zone. So sort of rational, but we have this gap that didn't fill on Tuesday the 20th. It did fill on Wednesday the 21st, just after the market closed. And here on Thursday, February 22nd, here's where it gets really messed up. Because as you can see, the gap was right here at 49.95. The calculated trading range was down here just below the gap price at 49.92 for resistance and 49.54 at support. Prices didn't trade anywhere near that. This is irrational. And as I said earlier, we have to draw back and look at the big picture. What happened here? Certainly nothing rational happened here. And so here we have a gap that was right at 49.95, and prices for the succeeding several days, and here is Friday, February 23rd, and Monday, February 26th, and the market has closed the gap on each of those 2 days, but we still have this gap down here at 49.96. This is irrational. The prices should have traded somewhere around the Taylor trading zone, the calculated trading zone, and closed the gap. This gap must close. When? I can't say for sure, but this gap must close. Now look over here. We have a high. This was the market high, an all-time high in the S&P, and this is, of course, the E-mini. Prices hit a high of 51.23, came down, did close the gap, and on Monday, the 26th, prices hit the Taylor support at 51.08, did close the gap. But we have this gap down here at 49.96. So now let's look at the big picture, the S&P 500. So let's look at the S&P 500 on a daily chart. I've marked out this price right over here that the market hit on Friday, February 23rd, 51.04. Here's where the market started the year. 47.45. This is 7.5%. 7.5% in just the first 2 months of the year. Now let's zoom in here to the previous 4 days, all right? Here we have right over here, Wednesday, February 21st, and you see this big gap here, 50.39. This is what I pointed out in the futures. And the prices, it almost looks like, it doesn't look like a evening star, but still in all, the prices today on Monday, February 26th, prices closed with no lower shadow. Prices closed at the low of the day. And we have this gap that must close. So looking at the big picture, what happened on the previous several days, it just doesn't make sense. When will it make sense? It will make sense when this gap closes and the market starts trading in a more rational range. So remember, while we calculate the numbers to see where the prices should trade based on Taylor, we also have to look at our candlestick formations and just remember that there's a gap from the previous day. that these gaps always close. When? Sometimes the next day, sometimes several days later, but the gap will always close. And so we have a high at 51.04. Doesn't make any sense what happened over these last few days. And so I think the market is going to take a breath and close this gap sooner than later. So that's my video for today. Keep your eye on the big picture. Sometimes when the markets trade in irrational ways that don't make sense, better not to trade. Wait till the market comes back to rational trading areas and keep your powder dry. Thanks so much for watching. Trade safely, use lots of patience, and I'll see you in my next video. Marv Eisen for Timeless Dollar Trading Academy.